0.25% on Friday. We had a loss of 0.1%, but it does seem that most investors are looking at the third quarter banking numbers that are starting to filter through, and that, of course, being quite key. Some good, some bad, but overall, we have seen some positive numbers.
Very true. We've seen very strong numbers. FirstBank released their results today, the Q3 numbers today. Saw some level of growth in PAT numbers, but at the top line, the banks are still struggling. And I think that is the biggest focus going forward. I think that the banks are continuing to improve efficiencies, to some extent, reduce the growth rate of the operating expenses. However, I think that a lot of the banks are riding on the wave of the massive differential between lending and deposit rates. And the suspicion is that the banks believe that this is going to be a long-term trend.
Well, it's interesting to note you're talking about the top line growth, and I suppose year-on-year numbers really showing some nice increases there, but one really needs to focus on the third quarter numbers as well. And if you take a look at those third quarter numbers for FirstBank, it seems that it really underperformed in comparison to what investors had hoped for.
Yeah, FirstBank was a bit of a disappointment. Disappointment in the sense that FirstBank is probably the only bank that has continued to grow its loan book. And if you continue to grow your loan book and your interest margins are not growing at the same rate, and I mean the only positive we're seeing in most of the banks is because deposit rates are so close to zero, they're able to mask the inefficiencies in their loan portfolios, and that is something that we'll continue to focus a lot of attention on. FirstBank continues to lag the industry as well in terms of cover for its loan book, which means that if we were to see a double dip, as is currently rumored everywhere around the world, we could see FirstBank's loan portfolio weaken significantly, and provisions are not adequate to cover that perceived weakness.
Yeah, well, Femi, I mean, looking at the profit before tax, quarter on quarter, down 45%. Coming in at 9 billion naira, and most were expecting the profit before tax number to come in at around 17.4 billion naira. So definitely missing on that front. And you're talking about top line growth. Some of these banks still offering quite a bit of value when it comes to investment opportunities. What are investors looking for right now? Is it going to be top line growth? Is it going to be the NPL
I'm not sure
scenario?
We're looking at the same numbers for FirstBank. The numbers released this morning showed significant growth in bottom line numbers. What is happening is investors were expecting that the size of the loan provisions was going to reduce, and that hasn't happened. But the point going forward is that a bank like FirstBank is positioned to benefit significantly from a positive turnaround in the economy. And as it continues to grow its loan portfolio and maintain a better than average provision, bad loan ratio to the rest of the industry. That is key for FirstBank, and I think that whilst the market digests the numbers that seem to look positive on the face of it, a deeper analysis of the numbers shows that there are fundamental issues in the banking sector, and the sort of numbers that we were used to, and I think that's the problem. The banks have set they've set this huge benchmarks for themselves. They're struggling to meet up with, and as soon as investors are able to readjust their valuations to reflect the realities of the economy and to reflect the realities of the environment in which the banks operate, then the numbers, like the numbers coming out from FirstBank, Diamond Bank and the other banks, will start to make sense.
Well, looking at Diamond Bank, and of course, Wale speaking to Diamond Bank CEO a little earlier, pre-tax profit coming in at 7 billion naira, and it seems that although they're not really looking at any of the rescued banks, they're saying that any kind of acquisition that will help them with their strategy going forward, they'll definitely take a look at that. But they do say that things should get better in the fourth quarter, and citing that costs should start coming down going forward. Are you positive, or do you think that this could happen? Do you think that we could see quite a bit of confidence returning, not only from the cost perspective, but also from the NPL perspective?
I think that there's going to be positive news on the NPL side across the industry. That is driven by the fact that the economy itself is beginning to show signs of life. And we believe that as we go into the election year, activities will start to recover once it becomes clear who the presidential candidates are for the major parties. But the bigger challenge for me is the banks continue to thrive on the low interest rate environment. and it appears that some of the banks are building a strategy around that. That is where I'm a little concerned, because I believe that the yield curve is going to shift, and the shift in the yield curve is going to mean that deposit rates or cost of funding to the banks are going to increase significantly, and the ability to pass on that increase to the customers is limited, because to a large extent customers are still paying, pre-correction rates on their loans. That is where I see the pressure on the banking sector, and that is where I think we should focus a lot of attention on.
Very quickly, Femi, I mean, looking at the banks that have released Access Oceanic, Stanbic IBTC today, Diamond, and of course FirstBank as well, where would you be putting your money?
I think I'll still be very long on the strong banks. I think that the recovery story presents short-term technical opportunities for investors. So for the likes of the Oceanic, the bank PHPs, there is definitely significant trading opportunities around there. But if you're looking at the long-term play, I'll continue to focus on the big, strong banks and be looking out for an earnings play.